What's up, everyone? The market was very weird today. Initially, it started out great as a bunch of stocks were breaking out, but then out of nowhere, it just slowly bled off, and this was the cause of Apple stock just completely turning over. Apple actually had some pretty bad news today, along with Goldman Sachs. As you guys know, those are two powerhouse companies, so of course we're going to be talking about that news, but we're also going to be talking about some good setups to watch for tomorrow and why this week will be pretty important overall for the market. So stick with us. We have a couple big earnings to talk about. But Tom, the market was pretty weird today. What's going on?
Yeah, like you said, Apple was the main cause of this, Mike. So the market ended up doing very well this morning. Almost every stock was gapping up, and it seemed like a pretty good day. We even saw growth stocks like DraftKings and stocks like that across the board doing very, very well. But then, like you said, that bad news with Apple here came in and it ended up hitting the market in a big way. But Apple itself fell all the way down to 147, closed down negative 2%. And you can see their average daily fall is only negative 1.37%. So they definitely beat that average, falling off to the downside there, as they actually plan to slow hiring and spending for some of their teams in 2023. This is obviously not good news, but I will say it's not too surprising. A lot of companies have been talking about job cuts and all types of things like that lately. So for Apple to slow hiring is honestly not too bad. At least they're not cutting jobs, Mike. That would sound a lot worse, but either way, it's definitely not good. The stock is falling off, and it really hit a lot of tech stocks. You know, Apple is down. Microsoft ended up falling down a lot from this, and even Tesla took a pretty big dip in the middle of the day.
Yeah, Apple's such an influential company where once it started to fall over, like literally everything else fell over. Like you said, whether it was Tesla or any other stock. So that was pretty big. And we could just see on the heat map today, for the most part, it was a iffy/choppy day, and there was definitely more red than there was green. Google closed down 2.5%, Apple down 2%, Microsoft down 1%. Like the only notable green stocks we had today was Nvidia, Meta, I guess you could say Netflix, and then Goldman. But besides that, it was kind of a dud for everything else.
Yeah, it definitely was, Mike. And it was cool to see some of these stocks close green, like Meta and Nvidia. And if you go look at their stocks, even like Meta, they were still dipping down a lot at the end of the day. They could have closed up a lot higher, actually, and it would have looked like an amazing setup, actually. So pretty bad to see the pullbacks there. Like you said, Apple was the main cause. It's never good to see companies obviously having job cuts or any type of slowdowns like with hiring or anything like that. As we know, a higher dollar and obviously inflation on the rise has been terrible for these companies. And, but I will say, Mike, it's not too surprising. Like I said earlier, a lot of people have been expecting things like this to come. And with the Feds continuing to raise rates, I'm sure that this might keep happening.
Yeah, and we also had a very similar situation with Goldman Sachs. So what's going on with them?
Yeah, they also said they're going to slow down hiring. And they also said here that they're looking to reinstate year-end job cuts. So pretty bad there. They said the economic outlook looks dim, Mike. And the CEO I saw had a pretty bad statement where he said that the economy is deeply entrenched right now with inflation going on. So it's definitely not good to see, Mike. He says he expects there's to be more volatility. And overall, though, Goldman had some pretty good earnings today, Mike. They ended up actually going up. But with the CEO coming out with all this bad news, it's obviously not a good outlook here. And he did say his analysts expect inflation to start to come down, though, towards the end of the year. But nonetheless, though, I'm sure that he doesn't really know exactly which way it's going to go. He did say to take that with a bit of a grain of salt.
Yeah, so Goldman's also slowing hiring, which is the main thing to know. And while this news with Goldman and Apple is definitely not good news, it's not as bad as it seems, and here's why. Basically, inflation has been out of control, especially over the past year. And the Federal Reserve is kind of balancing between slowing inflation down without completely crashing the economy. So we're kind of just aiming for a soft landing, and when you increase rates, your goal is to, decrease inflation, but with that also comes slower growth in the economy. So by seeing these hiring slowdowns and just companies scaling back a tiny bit, that should help with inflation at least a little bit. But the main goal, especially for the Fed right now, is to get inflation under control, because if they can't, we are going to have much worse problems in the market and just the world than falling stock prices and bad outlooks.
Yeah, we definitely are. And a lot of people always like to, they like to go back to other times in the market where there's been high inflation, like the 60s and 70s. And, there was a lot of bad things going on then. Obviously, like there was an energy crisis and a whole bunch of different scenarios. And it could get a lot worse, like you said. So hopefully the market starts to get a little bit better, Mike. Like you said, they're trying to like weigh, obviously they're trying not to raise rates too fast because like you said, it can kind of crash the economy here in the shorter term. So hopefully they can weigh it out right, Mike. And it did kind of suck, though, to see that Powell waited way too long. They kept saying transitory for months and months, and it finally caught up with them in a negative way. Ever since the beginning of the year, the market's been starting to fall off. So it's definitely been a stark contrast to how the last couple of years have been ever since the pandemic. We were just going straight up for 2 years in that type of easy monetary policy. And now that policy is changing, it's definitely making for a pretty crazy market, Mike. But I will say, looking at the SPY here on the daily, it looks like we're actually starting to maybe bounce off this bottom support around 370 to 373 pretty well.
Yeah, I was just going to say that, Tom. Tell us what we want to hear about. What are the most important levels for the SPY? What are you seeing? I can see today's move was down around 0.83%, which is slightly below the average down move of minus 0.96%. But what's going on?
Yeah, so you can see here, I actually just drew a little box here on the chart, and you can see how the SPY's pretty much been forming a pretty nice support down here, like right around, like I said, 372. We were having some pretty nice bounces, even though the market was down today 0.83%. The way that we gapped up this morning made it not look quite as bad. Honestly, if we hold this support, Mike, it might not be a pretty bad, maybe a bad dip buy here. A lot of people have been looking at these earnings coming up lately over the next couple months. And if we do see the earnings end up at least not being as bad as people expect, then I think that the market might have a chance to at least come up and maybe start to fill this little gap up towards $400 on the SPY, at least over the next couple months. Obviously today, though, as far as some intraday levels, Mike, we had that pretty big resistance early in the morning up around 389. There was an intraday support at 387 that we blasted below and fell all the way down to support around 380. So I'm really going to watch 380 for tomorrow morning. If we break below that, then I'll watch 378. So there is some pretty big levels coming up, and it was some pretty crazy price action today, like we said earlier.
All righty. Well, Tom, let's get right into the momentum plays for tomorrow. With the first one, we have NEO to the downside.
Yeah, good old NEO here. So go ahead and make NEO break below $20.80. And you guys can see that's actually a pretty big level of support here. I'm going to go ahead and draw a box here. Maybe we can even revisit this one tomorrow if it has a good move.
All right. With the next one, we have Shopify, but to the upside.
Yeah, Shopify here. So they pretty much double topped up here right around 34.20. So go ahead and make them break out above 34.20.
Sounds good. And then with the next one, we have Palantir, but to the upside.
Yeah, so with Palantir, again, they had that big move early in the morning. So go ahead and make them break that high there right around $9.44.
Sounds good. So we are watching Palantir and Shopify for potential day trades to the upside tomorrow, only if they break above the level Tom listed. And then we are watching NEO for a potential day trade to the downside tomorrow, only if it breaks below the level Tom listed. But guys, we have to showcase the bot play from today because it was pretty good. So our bot called out the Shopify 33 strike call options for this week at $125 each. A couple hours later, they were trading for $175 each. But we also had to talk about the bonus setups call out by Tom today, which was just absolutely amazing. Tom signaled a break below 387 on the SPY. And boy, did it break below that. So if you guys are looking to take advantage of this crazy movement that we're seeing in the market right now, definitely check out that first link in the description and the comments down below. You get access to bonus day trade setups like we just showcased with Tom. And we also get access to the hybrid bot plays, which is a completely custom made tool that you won't find anywhere else. You can cancel at any time. You also get access to swing plays and a private community. And you can chat with Tom and myself all day long. It's awesome. It's definitely worth trying out, even if it's only for a month. But definitely check it out. It's going to be that first link in the description and the comments down below. But Tom, we forgot to talk about earnings. What is on the schedule?
Yeah, so we have some pretty big ones actually coming up tomorrow morning. So definitely be on the lookout for Johnson and Johnson. That's going to be a pretty big healthcare stock tomorrow, along with just consumers and consumers in general. You know, they sell a lot of products, so definitely be on the lookout for them. Along with Lockheed Martin, that defense stock, that's going to be pretty big tomorrow. But obviously tomorrow and after hours, Mike, we're going to have Netflix reporting. That is probably going to be one of the biggest ones of the week, along with Tesla Wednesday night after close. So be on the lookout for those two. Those are the two big ones, Mike. Later in the week, we have AT&T, Snapchat, and American Airlines, even Verizon down there. But like I said, the big ones are Tesla and Netflix. Tomorrow and after hours, Mike, is going to be huge for the market. I cannot wait to see how these numbers come out with Netflix, especially with all the inflation and everything like that going on. Hopefully they didn't lose any subscribers because that would be kind of tough.
I have a feeling they did. So, looking at Netflix, it has been brutal this year in terms of earnings for them. It's like they've been in a nasty downtrend for like literally the past year as it is, but it's like every time they report earnings, it seems like the downtrend just gets worse. I believe that this earnings will not be as bad as previous earnings releases because Netflix had highs of like just under $700 back in November of 2021. It had lows of around 162 on May 13th or so. And then the two earnings releases we've had in between those two dates have been gigantic drops. So I believe that the worst is over, at least for Netflix in the short term, but we'll see what happens.
Yeah, me too. I hope it's better, Mike. But like you said, with those subscriber numbers, I'm not too optimistic with them to say the least. So hopefully they come out with some good numbers here. At least maybe at least at minimum, I think that they might recover up a little bit. You know, maybe they'll report some better revenue numbers, maybe a better outlook, maybe for the rest of the year too. So hopefully that's the case, Mike. It's going to be crazy. Hopefully they can start to fill that gap. Like you said, those past two earnings reports were terrible to say the least. What were those, like 30 to 40% drops on each of those? I remember when it happened, it was absolutely insane. And it honestly caused even more tech stocks to start to fall down.
Yeah, it was a nasty one. So keep Netflix on your radar tomorrow, especially. It's going to be crazy. Besides that, guys, definitely check out that first link down below. Our bot's awesome. You can cancel at any time, and it's perfect for this type of market. So besides that, we're set for a big week. Let us know what stocks you're watching down below. Don't forget to subscribe, and let's have an amazing week.